What's up everyone, doing a little market breakdown here on foreign exchange pairs. So I'm currently looking at the dollar here. I'm just going to zoom out to a higher time frame for you all here. So as you can see, right, weekly perspective, let me just move that out there a little bit like that. So from a weekly perspective, we have this little fair value gap here. Okay, price had sell side liquidity resting under these lows here. So whenever we trace back up into this order block here, this last down candle there, just show you for purposes here. So that order block there, when price traded back up into that, was obviously looking to seek down into this level here. In turn, run on liquidity here, leaving the resting buy stops above here. So if I just show you there now, so we have our buy stops here. I'll just show you more so here. So these buy stops were tagged obviously all the way over here on this candle here. I'm just going to leave that back there. And we had a mitigation block on the weekly time frame as well. So in turn, when price swept this low here, closed in this range right there, had our buy stop sitting above here, along with a mitigation block essentially right there. So if you notice, between the low of this candle here and the high of this candle, we have our imbalance. So we have our sell side imbalance, buy side inefficiency. So buy side has not yet been delivered on the upside. Also buy stops resting up there, which is probably going to get looked to run through at some point. But also, if you notice here, we have our low, our high, our low, our low. Last up close candle is our bearish break, or bullish breaker, should I say. So as you can see here, let me just break this down. As you can see here, when price was trading in around this level here, right about there, it's probably where you would want to place your trade. Right, that last down close candle, that return there, and boom, seeked right back up into that mitigation block there. So all of the sell side residing in this candle here, they offloaded that position there. So this essentially would have been underwater all through here, and then they unloaded those positions back up here, and expecting higher prices on dollar, which in turn means foreign exchange pairs will probably be going down. As you can see here, we have another mitigation block right there. The last down close candle, price mitigated itself inside of that, seeked higher. There you go, another order block there, straight up into that last little bit of the mitigation block. And clean delivery, very nice. Still seeking higher prices for dollar. I'm going to take a look at GBP. So British pound has been looking nice as well. Let me just break this down for you all here. As you can see here, so on the daily perspective, we have a volume imbalance here, and break it down into a lower one. So we go to the we go into the 1 hour. So as you can see here, this candle there with the long wicks, that's the rejection block. Over here you can see that used again, acted as an inversion level, where I sold off of that right at the 9 o'clock hour. Last up close candle there is bearish order block with a fair value gap, if you can see that there, right there. So 2 for 1 job right there. And this is our range currently at the minute. So notice we have our range low and our edge high. I'm using the bodies there, so essentially this is our dealing range here. So we use a Fibonacci. Here's our equilibrium price point right there. Okay, so anything up here is at a premium, anything here is at a discount. So essentially as you can see, price retraded back up into 62% retracement level of that range, sold off nice. All the while it was inside of a mitigation block and mitigating positions as it was coming up here. So let me show you there now. There's our mitigation block here, right there. Came up, tagged it nicely. Look at the bodies. Looks nice. A wick through, closed under, didn't close above it, closed under it. We have a nice institutional order flow entry drill right there, as well as price being at an equilibrium point here. So it came back up to a premium, just threw it a little bit and then sold off. Equal lows resting there, liquidity pool resting right there, sell stops right here. So I'm expecting these sell stops to be taken there, and probably looking to make lower prices more on GBP. Yeah, that's what I'm seeing currently at the moment. Then scroll over to Canadian dollar. We will show you just from our time frame perspective as well. It's going to correspond well there with dollar, so I'm going to actually show you here. So I was looking at a 3-month chart. So if you notice here, that's a mitigation block right there on 3-month perspective. Possible return into that, don't know, we will see. Stop sweep right there, so obviously sell side liquidity resting above here. Price came just tagged it a little bit, ran past it, break it back down into a monthly. Also you can see this fair value gap as I've shown here, with buy side liquidity resting there and there. So I'm going to just go into a lower time frame here, and as you can see, daily chart. So this is actually the start of the year, January. So this is the year so far on Canadian dollar. As you can see for the year, like, it's not moved a lot, like at all. Back in August here, we had a nice little institutional order flow entry drill there. We had equal highs here as a target. This is a volume imbalance, so I'll show you. I think it was on a week, no, monthly. Yes. So if you look right here, small little volume imbalance right there. Just tapped it there. Now that hasn't been filled yet. It's left a wick. It's been wicked through, but it's not been filled with a body, so to say. So I'm looking for that to seek up into this level here. Probably seek that buy side, and yeah, let me show you here. Another mitigation block right there, just tapped it, and yeah, as you can see, there's even another order block there. And I'll show you this right here. Like, I'm just seeing this shit just bouncing off the chart straight away. If you look there, 1 standard deviation. Didn't quite get 1.5. Close though, but as you can see, one standard deviation there. So if you had a sold here, right on that there, let's say 20 pip stop, okay, with a target of 1 standard deviation, you would have made 130 pips with 20 ticks risk, essentially. Still have this all sitting in here. That doesn't look very stable to me. That's probably going to get swept below into, in my opinion. But longer perspective, I think we're going to probably still see seeking higher prices on dollar, and any dollar pairs like USD CAD, USD JPY, them type of pairs, and other pairs such as Euro, GBP, Euro to the dollar, GBP to the USD. I think their perspective is probably going to go to sell side, and yeah, that's pretty much it. I just thought I'd jump on and do a little breakdown of everything I was seeing here on the charts. And yeah, if you liked the video, please like and subscribe. And yeah, till next time, thanks for watching. Safe trading.